record to the. Hello, hello. So this is Tanya Jones with Atlanta Metro Properties. I'm here with Nedra White-Shaw. She's a mortgage lender with Guild Mortgage. She's also known as the Money Lady, also known as the community lender for all of the outreach work that she does in the community. So Nedra, thank you so much for joining us today. You know, we're in Home Ownership Month. This is National Home Ownership Month in June. So we want to make some homeowners. And I know one of the biggest things that people worry about when buying their first home is affording the down payment. So many first-time buyers hear about down payment assistance, but they're not sure if they can qualify. So can you explain to us the various down payment assistance programs you have through Guild Mortgage, who's eligible, and how can these programs help buyers get into a home?
Absolutely, Tanya. First of all, thank you so much for allowing me the opportunity to chat with you about home ownership during this month out of all months. I can't think of a better time. Um, and I appreciate you. So in terms of down payment assistance, which is needed more now than any other time, in my opinion, than any other time over the past 20 plus years that I've been helping put families and communities in homes. And the reason why I say that is because of course, the economy. Everybody's stretched. So Guild works with pretty much all of the down payment assistance programs that are available out there. And the way I like to break it down to my clients is that you have the state down payment assistance program, which is Georgia Dream, which you can use anywhere in the state of Georgia. Then you have municipality DPAs or down payment assistance programs, where you have the five major counties in metro Atlanta offer a down payment assistance program. So, for example, you have in DeKalb, you have We DeKalb. In Clayton, you have Clayton County Housing. In Gwinnett, you have the Home Stretch. And in Cobb, they also have their version of a down payment assistance program. And then, of course, Fulton and even the city of Atlanta, that municipality has a down payment assistance offerings available. So there is assistance out there for everyone. The one that I find myself using more often than not is our in-house down payment assistance program, which is our zero down FHA loan. And the reason most of my clients opt, when I line them up side by side, they do choose this particular program because it just like Georgia Dream, you can use it anywhere in the state of Georgia. So there are no address restrictions, no zip code restrictions like some of them. It does not have to be a home that's listed on a website. Say, for example, like the Invest Atlanta. Some of their programs you must buy from a particular pool of homes that they have purchased and renovated. The second reason is the credit score. The minimum credit score requirement is 600, opposed to if you stack that up to Georgia Dream, which you can also use anywhere in the state of Georgia, just like this program. The minimum required credit score is 640. So because of what we have gone through as a society over the past 10 years, not to mention a pandemic, some people they have credit challenges and credit issues, but that's the great thing about FHA. It is designed for potential homeowners that have had a little bruised credit in the past, and you can still buy that dream home. So that's the second feature. The third feature is that you can either get it as a grant that you don't pay back as long as you stay in the loan for 3 years. And I used to say the home, but it's really the loan because you can refinance and you're getting out of the loan, and then you pay back a prorated amount of that 3.5% down payment that's required by FHA that the down payment assistance grant swoops in and pays for you. There's another version of that same program that you pay it back in the form of a monthly payment over a 10-year term. So you pay it back, say for on a $350,000 house, the down payment is approximately $10,000. So you pay back that $10,000 down payment over 10 years, or you can pay it back in 2 weeks after you close, and you're just left with the primary loan, the FHA, and there are no prepayment penalties. So those three reasons, the flexibility with our in-house zero down FHA loan, the fact that you can use it anywhere in the state of Georgia, there are no income restrictions. And what I mean by that, for example, Clayton County, your income has to be at 80% or less of the area median income in Clayton County. And most of them are like that. You have to be at 80%. So with our in-house, I mean, you can make six figures. And if you just would rather save your money for furniture rather than your down payment, you have that option. So down payment assistance is there. It's available. It's not as complicated as a lot of people think it is. We can close within 30 days of going under contract with our in-house down payment assistance program. And that's the reason a lot of people opt into that. But don't get me wrong, Georgia Dream is a great program, and it covers both your down payment and your closing costs.
Okay.
And the rates are very, very competitive. The time it takes to close may be a little longer, but it just depends on what works best for your client and their family when it comes
Okay.
to down payment assistance.
Well, that was actually leading into my next question. So, one of the first steps in getting a home loan is getting pre-approved. So, can you walk us through the pre-approval process at Guild Mortgage and let us know what documents buyers need to have available, how long does the process usually take, and what factors do the lenders consider when pre-approving someone?
Absolutely. The process to get pre-approved, the first step that I like to take is to have what I consider an introductory, get to know your story conversation with your client. So, for example, Tanya calls me or texts me, hey, can you call Betty Joe at this number? That's all it takes. From there, I pick the ball up and run and call them within the same day of the referral. And I'm like, hey, Betty Joe, this is Nedra. I work with your real estate professional, Tanya. How are you doing? I'm fine. Well, my first question to you is, do you have any questions or concerns that you've been wondering about the mortgage process and or programs that I may answer right now? Let's get that out of the way. 9 out of 10, they have questions, which I love. I can be anywhere. I can be in Honolulu and answer their questions. And then I'll ask them, I say, hey, this is my work cell number that we're talking on. Would you be so kind to text me your full name so that I don't mess up the spelling and your email address? Once I get that information, I send an email and I copy the partner, the referring partner, and it's a link. And I explain to the buyer on the phone that I'm going to send you an email now that you're going to text me your email address. First of all, so that you know who you're talking to, because 9 out of 10, they've connected with you, Tanya, but here I am, this lender person. Who are you? So I always try to reduce their anxiety and say, hey, I'm going to send you an email today with all of my contact information so that you know who you're talking to. You can check me out, and that just to create a feeling of comfort. And because they are sharing a lot of personal information with me. So I'm constantly in building the relationship and the bond from the very first conversation. Once they get that email, there's a link that they click that takes them directly to my website to complete the online loan application. Now, not all clients are tech savvy, and of course, we have options for that. We can take loan applications over the phone. They can come into the office, and I can type it in. They can give me the information. But 99% of our process is tech. It's tech. It's emails, the borrower portal. Everywhere has a portal. I even have a portal for my dentist and my doctor. So once I realized that the entire world operates out of portals, I leaned into sharing that whole process with my buyers in this industry. And most people are pretty used to working out of portals. So
Okay.
so once they complete the loan application, they receive and click finish. They receive a second email with a list with instructions in a list of the bare minimum documentation to upload to that same secure borrower portal, which consists of a driver's license. If you're a W-2, your most recent 2 pay stubs, 30 days worth of pay stubs. If you get paid every week, it would be 4 pay stubs, 4 to 5, but it's 30 days worth of pay stubs.
Mm-hmm.
If you're W-2, your most recent 2 years W-2s, no tax returns. We do not even want to see tax returns if you're W-2 only, which is this is the first lender that I've been with, and I've been doing this 20 plus years that says do not send tax returns. I'm like, okay, are you serious?
Oh.
Are you? So so
That's
so
really
that
interesting because usually the loan officers want to see tax returns. So that's good information to know.
Absolutely, absolutely, and it does make a lot of borrowers feel much more comfortable once they realize that I'm saying W-2s and not tax returns. So I overemphasize W-2s, no tax returns, just your one-page W-2 that you send to your tax preparer to do your tax returns. And they'd be like, oh, okay, the W-2. Um, Most recent bank statement. And the reason we ask for assets up front is because a lot of times the money is not in there unless they're pulling it out of a retirement account, and then they can send that. But it's so that we can look at it on the front end and see if you have an affirmed payment coming out and see if you have a tax liability coming out, because that will not be on your credit report. A lot of people, may or may not send the asset document, the bank statement, because the funds are not there. But what I've started to do is explain where we're asking for that so that we can get ahead of all of your liabilities. Because if you give that to us midstream or after we're under contract and we've already pre-approved you for just the debt on your credit report and the amount of your new mortgage payment, then it might not be accurate, because once we get the asset statement and we see that you have a tax liability, or we see that you have 3 or 4 affirm accounts that you're paying, and then we add that, you may or may not still qualify. So just the bare minimum, uh, pay stubs, 2 years W-2s, bank statement, and driver's license. And then we go an extra step before your client goes under contract, and we send the income documents to a live underwriter, the same underwriting team that's going to clear our file to close on the back end. And we approve the income because, say, for a nurse, for example, they work a lot of hours, a lot of overtime, and we want to maximize their income. First of all, we don't want any hiccups after we're under contract. Oh, I thought the income was this. No, nobody wants to hear a lender say, "I thought," when 2 weeks from closing. So we have pretty much eliminated that by doing a lot of the heavy lifting on the front end before we even generate the pre-approval letter. And all of this can happen. I mean, we move at the pace of the buyer. If, for example, we have someone that completes the loan application and uploads their documents within 24 hours, the timeline is within 2 business days. We'll have your pre-approval letter.
Okay. Oh, good, good, good.
And typically, people are busy, people are working. So on average, the pre-approval process takes 2 to 3 business days.
Very good. So now that leads me to my third and final question. So, can you kind of give us some numbers? Can you tell us what does it really cost to buy a home? So, we know about the down payment on FHA loan is 3.5%. But what other costs will the buyer incur?
That's a great question, Tanya, because I don't know how long you've been doing this wonderful lifestyle of real estate.
It's been over 20 years.
Okay, so we cut off at 20, we say 20 plus. We don't say, oh, 25 and a half. It was 20 plus,
Yeah.
20 plus years. So do you remember when the number in just about everyone's head was 3%?
Oh
3%,
yeah.
closing cost of 3%.
Hmm.
That is no longer true. On for an FHA loan, closing costs are coming in more like 4 to 5%, and that's because what people may or may not realize is that when you choose an interest rate, so the market rate may be 6.5%, but lenders receive a chart of rates, and beside each rate, there's a price. So you actually pay to get the rate. Back when I first started, there was a par rate, like 6% would be free. So very rare do you look at a chart of rates and you see zero beside any rate. You either see a fee, which in the form of a percentage of the loan amount, or you once you get higher on the rate chart, you actually get a credit, which we call a lender's credit. You know, 7% interest rate may yield a lender's credit of $2,000 or $3,000 towards their closing costs. So, and I said that to say that that fee, say if the market rate is 6.5 and you want a 6% rate, you can get 6%, but it might cost you $7,000. If
Okay.
you so that's included, that is a part of the closing cost. So say if the closing costs equal 3% of the purchase price before you add the price to get the rate, then that is what increases the closing costs up to 4% or 5%. But the buyer has complete control over that, depending on what their true pain point is. And I understand that, people want the lowest monthly payment and they want to bring nothing to closing. So you have two pain points, but they're contradictory when you're talking about if you can have less closing costs and a higher payment, or you can have a lower payment and more closing costs, depending on how much seller paid closing costs that you're receiving.
And of
So
course, if they have a great real estate agent who's able to negotiate on their behalf, we're going to get the seller to contribute as much toward their closing costs as possible.
exactly, exactly, and that's what I say. I'm sure Tanya's gonna good. Tanya's been doing this a while, and she's great at negotiating closing costs.
Absolutely, absolutely.
In your opinion, are sellers willing to pay 3 to 4%, sometimes 5% in closing costs now?
Actually, these days in this particular climate where we're kind of shifting more toward a buyer's market, sellers have been quite generous. That's why I really wanted to come on here and talk about the importance of home ownership and talk about how available it is to get the down payment assistance, because right now there are a lot more homes on the market than we've been seeing, and sellers are quite generous in terms of helping to contribute toward closing costs. So, I mean, I've seen some sellers even go up to a 5% contribution toward a buyer's closing costs. So that helps the buyer just have very little out-of-pocket expenses, especially if they're getting down payment assistance. So, like I said,
Exactly.
that was another reason I wanted us to have this conversation and do this Zoom, because, we definitely want people in our community to understand that homeownership is available, it is accessible. They just have to work with the right partners.
That's right. That's right. I find myself, I volunteered for Leadership DeKalb's closing retreat last week, and somebody looked at me and said, "Well, now's not a good time to buy a house." I hear everything, the rates. So I spend a lot of my time in the community educating people. Oh no, what you might want to be concerned about is the fact that that same $300,000 house that you're looking at today is going to be $320,000 next year.
Yeah.
And because the prices of the homes go up, and who knows what rates are going to do, but you can't sell yourself, you can't market yourself, you can't base your decisions on the rates, because you marry the house and you date the rate,
Yes,
because you can
because dates always
always
change.
change that rate. You can
Rates
always
change.
refinance that rate. One other thing I did want to share with your audience, Tanya, is that people may not realize that a part of the closing costs is also includes the escrows to set up the accounts for the property taxes and the homeowner's insurance. So
Yes.
if you're and the buyer has control of the price of the homeowner's insurance. So I always advise my buyers, my clients to shop the homeowner's insurance. You don't have any control over the property taxes until you're able to file for a homestead exemption and get a credit, or a senior exemption and get a credit, which can take 6 to 12 months, depending on what point in the year you close, to get those credits. So you have to be able to afford the mortgage for at least I would plan on affording it for a year before you're able to get those credits. So if you get a quote for homeowners insurance and the premium is $2,500 a year, that $2,500 becomes a part of your closing costs.
Mm-hmm.
The escrows for the property taxes, three months escrows, that's a part of your closing costs. And of course, you have the attorney fees, you have the state tax fees, you have the lender's underwriting and processing fee. And for Guild, that amount is right below 1,600. So people, I mean, the lender's not making a whole lot of money on fees. I mean, that's it. But there are so many other fees, the appraisal, which, by the way, we do give you a credit for whatever you pay for the appraisal towards your closing costs, just like you get your credit for your earnest money towards your closing costs. You also get that $675 appraisal fee that you pay up front back, as long as you pay with a debit card and not a credit card, because you can't do cash for credit, but you can do cash for debt.
Okay.
So that's the breakdown on some of the fees. And I'd say a sweet spot would be between 4 and 5% if
Mm-hmm.
you can negotiate
Yeah.
that amount. Because FHA allows you to get at least 6%.
Up to 6%. And like I said, in this particular climate, you know, as we sit here in June of 2026, it has become a much more buyer friendly market. So yeah, but Nedra, thank you so much for coming on with us. Thank you for being here. Give people your website and let them know how they can contact you.
Absolutely. Thank you. So again, I'm Nedra White-Shaw with Guild Mortgage, and I am Nedra the Money Lady White-Shaw on TikTok, Instagram, Facebook, and the other one, the business in LinkedIn.
LinkedIn. Okay,
Yes.
Nedra the Money Lady. So, ladies and gentlemen, hopefully you're watching this video and you've gotten some great information, something that's useful to you, and something that will make you think about home ownership, because home ownership matters. And Nedra, thank you again for coming on with us. And again, I'm Tanya Jones, AtlantaMetroProperties.com. Thank you for watching. And Nedra, you and I need to do another video, because this was some great information and you've got a whole lot more to say, and I've got a whole lot more questions for you. So let's consider this part one.
Absolutely. I smell a series.
Yes, absolutely, absolutely. All right, well, thank you so much. So we're going to sign off here. Again, I'm Tanya Jones. AtlantaMetroProperties.com is my website. If you're a first-time home buyer or even a second-time home buyer, I would love to work with you in the Atlanta metro area. Thanks so much. Until next time.